Come satisfy your appetite for wealth with baking profits. Now, here's your hosts, Mike and Brad. Welcome to another week of Baking Profits. We're your hosts, Mike, aka DeFi Donut.
And I'm Brad, aka the Bread Maker.
And today we're going to dive deep into technical analysis and really understand the difference between fundamental trading versus technical trading. And then we're going to take a look at the future of crypto. Now, if you'd like to, you can follow the crumbs on our socials at Baking Profits, at Bread Bites, at the Bread Maker, at DeFi Donut.
And be sure to subscribe wherever you get your podcasts.
Now, tonight we are drinking Heaven's Door, and it's pretty smooth.
This one is really damn good.
I'm going to put it possibly above Angel's Envy.
Really? Like, what is your top 3 ranking at the moment?
I mean, it's going to be definitely Heaven's Door, Angel's Envy, Jefferson's.
Damn. I think I'm still going to put
Hirsch.
I think I'm going to put Heaven's Door first. And then I'm going to put Hirsch, and then I'm going to put Angel's Envy. Probably Jefferson's number 4. But yeah, it's pretty damn good for, this is like a mid-shelf.
It's like a $50 bottle.
Yeah, $50 bottle. I'm like, it's about a mid-shelf bourbon, but this would be a go-to for me on a regular basis.
This is the second episode in a row that we have finished an entire bottle before diving into the episode.
I don't know if that's good or bad, but I guess we're going to find out through the next hour or so.
Yes, indeed. Now, I know the first thing that we really want to talk about is technical analysis, how you can trade using technical analysis and why it's important. And I think before you can really dive into the TA of things, you got to really understand that there's 2 types of trading. There's fundamental trading and there's technical trading. And historically, fundamentalists, they look at, company revenue, the products that they're going to be making over the next few years. They look at their books, their PE, all of that. Technical ignores all of that and only, looks at the indicators, momentum, volatility, trend, things like that. When you think about your trading, I know the answer to this, but explain how you trade.
Yeah, I have almost always exclusively traded technical analysis. I know you have been a little bit more on the fundamental side early and kind of done a little bit of a mix of both. I definitely think I don't really hear much about the fundamental side on the crypto side of things. That tends to be very much more on the, stock market side of things. And I think obviously part of the reason for that is there's just more fundamental data on the stock market side than what you're going to get in crypto. But realistically, on the fundamental side of things, really you're kind of trying to buy into a product and a business that you believe in long term and based off the fundamentals. And I think you really can't, in my opinion, you can't really trade short term off of fundamentals. Most of it is really long term trading. So, for myself, I think technical analysis brings the ability to trade short term, mid term, long term. You can trade kind of it all depending on the time frames and the type of technical analysis you utilize. You can trade all of those different time frames or different styles of trading. Technical analysis just gives you a little bit more versatility than what fundamental does.
Yeah, absolutely. Warren Buffett is, the classic example of a fundamental trading value investor. He actually takes the time to understand the company, understand the market that they're operating in. Whereas technical trading is, it's less sentiment, it's less what's happening outside of the markets, and it's more what's just happening on the chart, the Japanese candlesticks. I know for myself, I'm very much overbought, oversold, momentum trader. I like to find these pullbacks and take advantage of it. I do, invest into longer term plays, thinking about certain sectors that might be very profitable later on down the road, but I think you can still combine fundamental trading with technical analysis to make it, an even better trade. And
Agreed.
I think that's a good point though about crypto is like, there really aren't fundamental traders. unless you want to say like diehard, project fans that really think like, oh, I know Ripple. I mean, geez, man, people all about that.
Trash.
Yeah,
Don't even get me started on that.
But I mean, pretty much any token, any project, you can find a community backing it and behind it that are just totally pumping it up. And, that in and of itself could, in their minds, think, oh, I'm a fundamental trader of this asset.
Yeah, I mean, if you really want to boil it down, you kind of can think of it as like the fundamental side of things is like your belief in the company and the product and what you feel like is going to happen in the long term based off your own beliefs in that product. And then the technical side of things is more of like the statistical data from the chart of how that product or company trades. So, and with crypto, obviously there's a little bit less data on the company's longevity.
Yeah.
Whereas in the stock market, you have a lot more data you can base a company on. You can look at a Microsoft or an Intel or, whatever and see their product lineup and what their future plans are and what their PE ratio is and all this different stuff. And you can kind of take some data and you can apply it to the fundamental side. Whereas on crypto, it's not as readily available to really fundamentally trade different assets within crypto. A lot of the traders that are within crypto are very much heavily on the technical side of things and taking the data and the statistics and the previous trade history and utilizing that to their advantage to execute future trades.
So I know like when it comes to, using technicals, you trade primarily support and resistance. You're looking for those areas of pullback. But in my mind, I'm thinking like these, lines on the chart, these imaginary lines, they have power because so many people are finding that other people are using them. So I know that's the biggest argument against technical trading is like, okay, well, if everybody knows about it, how can it possibly be successful?
Yeah. And I mean, honestly, I think the more people that know about it, the more successful it is because it gives more power to the technical analysis by other people abiding by the rules of that technical style of trading. And there's a lot of different styles of trading. I'm a big support and resistance person. We're both kind of somewhat big on momentum and identifying the momentum, but there's also a large amount of people that trade trend. And then there's a large amount of people that trade volatility, and you can blend each of these aspects into each other in some sense and, create some formula of strategies that you can use. But, essentially support and resistance is identifying areas, from the support side of things, you're identifying areas and within the chart, whatever time frame you're looking at that are essentially hitting the same area and bouncing up off of that area and going upwards. And then resistance is essentially the opposite of that, where it's the price of an asset is essentially touching a specific area and rejecting downwards off of that area. And the support and resistance plays there are best played whenever you're able to long support options. And, if you see a specific price point in which, let's take Ethereum, for example. If you think, Ethereum has consistently hit $1,800 and then it has bounced up off of $1,800, ideally you would want to long, around somewhat near $1,800 and then ride the bounce up off support, above that. And then you would set a pretty tight stop loss below $1,800. So if that support level ended up breaking, you're not risking a whole lot of capital. Which generally ends up being a high risk, versus reward type of trade. Same on the resistance side. If you see that on Ethereum, the resistance level is $1,900 and you've seen price reject that pretty consistently, you may want to try and open up a short on Ethereum, somewhat near $1,900 and then set a stop loss slightly above $1,900. So if it breaks out above that resistance level, you can stop out of that trade and not take a significant loss. So, I mean, there's a lot of different ways to trade technical analysis. I know, for us, support and resistance and momentum are kind of some of the key ways that we trade, but, there's a lot of different ways to do it. Kind of like the old saying goes, there's a lot of different ways to skin a cat. There's a lot of different ways to trade technical analysis, and everybody has their different strategies and ways of doing things. And it doesn't necessarily mean one way is better than the other way. It's just what suits your personal style and, your personal knowledge level that ultimately results in how, profitable or unprofitable you are.
Yeah, absolutely. I mean, I always think it's interesting that people can have very similar trading styles, but trade them completely differently. Like, somebody could think of support and resistance as like, okay, these are longer term plays. I'm going to look at a daily, weekly, monthly chart, and I'm going to, buy at support and hold till resistance, which depending on if you're looking at a daily chart, that could be a year's time. Or if you're looking at a 1 minute chart, that could be an hour. And, you could have the same, like two different traders trading the same, strategy using different time frames, and it changes the entire picture. Like obviously the longer, time frame person, and that's more passive, whereas the day trader, it could be trading on that 1 and 5 minute chart. That's why I always find interesting about technical analysis is that, universally it kind of works the same if you understand the mechanics of it. And, the time frame situation can apply to any of these, trading styles, like the volatility. I know when we traded options, right? Like the volatilities, indicators were always good to know because that's mainly what options is built about. And, with trend, you can really start to pick up on, when the buyers are coming in and when the sellers are coming in. And if you're not looking to hold long-term, you might be able to exit a little bit earlier and then possibly buy back in earlier, but still hold long-term. So I think these are things that should be taught to in every citizen, right, at an early age. But unfortunately, we don't, ingrain finance into the younger generation's mindset. And so things like technical analysis, it sounds like, fugazi, magic on a chart. That's why I think a lot of people hear about it and they're like, oh yeah, sure.
Yeah, I mean, I think when it comes to, I'm not as into teaching technical analysis to, high school or college students. I think, those people just need a general finance understanding. I'm more of understanding finance, understanding budgeting, understanding loans, credit cards, interest rates, things like that. Not necessarily diving into technical analysis, because I still think that's kind of it's like a niche of a niche of a niche kind of situation. But I do think from a general standpoint, I think finance needs to be taught more from a schooling standpoint. But you did touch on one thing where you were talking about, each trader could trade things differently. And that's super true. I was even thinking about support and resistance. So the example that I gave about, longing support and shorting resistance, I mean, you could trade that in a completely opposite way, totally differently, where you could trade the trend of support and resistance, where once a trade breaks out of resistance, you long the breakout of resistance for a run up. And when trend breaks the breakdown of support, you short that level. And it's essentially trading support and resistance, but you're doing it in an entirely different way than the initial way that I talked about, where you would long the support and short the resistance. It's like you're then longing the breakouts of resistance and shorting the breakdowns of support. So, there's a lot of different ways to trade that. And obviously, you have support and resistance, you have momentum trading where you're trading, overbought and oversold levels. And then you obviously have the trend trades where you're, identifying a trend in the market, whether you're in a bullish uptrend or a bearish downtrend, and you're kind of playing to that appeal. Generally, we see a lot of people trend or volatility trade more on the swing side, and, momentum and support and resistance trade a little bit on the shorter term side, maybe like day trades, scalps, things like that. So, that's usually a commonality, but I think technical analysis gives a large amount of versatility to the average trader. Like you said, if you pick a 1 minute to 15 minute range, you may be looking to be in and out of this trade in the same day, whereas someone else may be looking at a somewhat similar trade, but they may be looking at a 1 hour to 4 hour to daily chart of something similar, and they might be like, I'm going to hold this for a week or 2 weeks, and they might be trying to capture larger gains, or a totally different angle to the overall market, but they could be trading in a generally same strategy that you are. So I think technical analysis offers a immense amount of versatility in the way that you can attack it, which I think is good because there's a lot of different ways to go about it. But it's also bad in the way of like a new trader. I think it's very overwhelming. The average new trader comes in and there's so many different opportunities. You could trade on a 1 minute time frame, a 5 minute time frame, 15 minute, 1 hour, 2 hour, 5 hour, 4 hour, one day. You can trade on so many different time frames. And then once you start attaching indicators to that, things just compound and compound and compound. And then you're just like, almost in over your head. So, I think the versatility is great for the experienced trader, but for the new trader, they really have to do a good job of kind of narrowing in on what they want to accomplish and how they want to trade, and then focusing on timeframes and the way they want to trade that to really be, successful in the long term.
Yeah, one of my best friends, his neighbor was a wealth fund, manager. He worked at like a small company, I don't know, whatever. But whenever I would talk about technical trading with him, he always thought it was bogus. He's like, there's nothing to that. It's just all fake. And I would always be like, how can you say that when it's based off of real data? I mean, if you want to talk about fake, it's like the price to earnings ratios are fake. Like these things are exponentially blown out of proportions.
Yeah, they're so inflated.
Yeah, it's like, what? I mean, it doesn't make any sense. So I think technical analysis has more actual, like valid, like, actual results here that we've got true data that has happened. I think where people, end up failing with technical analysis is the divergences and the false signals that occur with some of these. They'll for example, they'll see that, this, price is very, overbought. It's time to short, but really it could be a situation where news has happened. The price has caught a whole bunch of momentum and it's, in the trend. And, the famous saying is you don't want to go against the trend, but there's plenty of times where RSI or, something is pointing of like, hey, this is a great time to short, but it might be alerting that, early for a while. And, we've seen plenty of times where it's like, even for months at a time where it's like, wow, the market looks like it should be going down, but it is going up. Like, what is happening? And I think as a new trader, they fall into those traps all the time. And it's on both sides. You hear the terms bear trap, bull trap. It's the smart money taking advantage of the dumb money because because they're the house, right? They know that people will always keep putting money into the system and they don't understand the game. And there are a few people that do understand the game that can kind of bob and weave in through this and be able to make money. But most people don't. And I think that's why there should be some education with technical analysis, because if people, especially like young individuals who just start trading, more than likely they're going to be trading nowadays, they're going to be trading in like a Robinhood-ish style of environment. And it's going to be based like fully off of social media. You're going to see other influencers, people talking about those assets. So I think people need to have some sort of basic education, but I also get that there are more important things that come ahead of that. But also it's like, do we really need to teach like 7 years of history? You know what I mean?
I mean, yeah. I mean, you're speaking my language when it comes to the schooling side of things. It's like we, from school standpoint, we teach a lot of crap that is extremely unnecessary. Like, I've said it multiple times to you is like, I remember spending 9th and 10th grade learning about the Greek gods. And I'm like, we're basically learning about fake ass shit. And it's like, I could be learning about real life problems, like understanding how to budget or what interest rates do and how you subscribe to credit cards and things like that and sign up for credit cards and how that impacts your credit score and things like that. But instead, I'm learning about these fake people that threw thunderbolts down at the ocean and shit. Like, I'm like, what are we doing here? But that's a totally another, other topic. But, I think from a technical analysis side, I really still don't think that it should be something that's necessarily taught in schools. I think the overall broad topic of finance needs to be more brought up in schools, but technical analysis, I think that's more of like a get into it if it's piques your interest type of thing, and learn it on the fly, whether that's through actual schooling or through YouTube or other ways of identifying the education for technical analysis. But I mean, I do think the average trader comes in and they're so excited about technical analysis and they're taking a couple of pieces and snippets of things that they learned and then they're applying it and it works for like, a couple of weeks or something like that. And then they realize, oh shit, this sucks now.
Yeah.
And then they're like, oh, technical analysis doesn't work. Or they just blow up their account. And they're like, oh, trading isn't, I can't make money from this. And it's like, you really have to give it a large amount of time. I mean, both of us, I think we both got into technical analysis trading right around the same time, more or less. It was, 10, 12 years ago. And I think both of us took some pretty significant losses on a regular basis. I know for me personally, I basically lost at the time, which was a large amount of money to me. I lost about $5,000 technical analysis trading. And I would probably say the average person, probably about 60 to 70% of people at that point are probably going to be like, nah, this isn't going to work out for me. I'm not going to continue with it. And that's why most traders fail, honestly.
Yeah.
And at the end of the day, you really have to perfect your craft and you have to find ways to see around corners and identify what you think is going to happen in future markets and kind of future forecasts, what you think is going to happen to really kind of perfect your craft. But, some people that lost, $5,000, which may be a large portion of your overall wealth, at that point in time might be like, I just screwed up. I lost this money. I can't do this anymore type of thing. But, both of us, stuck with it, learned more, learned from our mistakes. That's the biggest thing in trading. I think you have to really identify, okay, I made this mistake here on this trade. Why did it happen? How could I prevent it in the future? And what do I do next time this situation presents itself? And I think a lot of people don't do that. And that's where they get tripped up and either fall to the wayside or just consistently repeat the same problems or mistakes that they have, long term.
Yeah. I mean, I think I remember all of my losses far more than my wins. Even just before we started recording this, I was talking about, when we had our options alert service and I went on an insane run of like 22 option calls that I nailed. And then the one loss that came in and just it put a curse on me, and it was LVS. And I remember my losses because those taught me lessons. The wins, especially in the beginning when you're winning, that was the first time that I came out and publicly alerted. I had made many, 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 many trades on my own, and I felt confident in my own trading because I had my own set of rules. But I quickly learned as other people's money became my money, I started playing a little bit more cautious, which changed my, trading strategy. And of course it ended up, not as good as I would have liked.
Right.
And so I think when you're thinking of technical analysis, you have to look at other factors with that. You do have to have a sense of what fundamentals are of what you're buying, whether that's like, for example, in crypto, look at the team, read the white paper. A good question that I actually wanted to ask earlier, but I never got around to asking is like, do you think that there's more information about crypto companies than we get of actual companies? And what I mean by that is like we do have white papers, but we have on-chain data. So we could technically see every transaction that we would need to see. But does that help us, or does that like give us paralysis over analysis?
No, definitely not. I don't believe that for 5 seconds. Because if you think about, let's compare a Microsoft to Ethereum. I can see product lineups that Microsoft has. I can see things that they're executing on. I can see, things in their pipeline. I can understand the product lineup that they currently have. I can see their revenue on a regular basis. And you can see some of that stuff with Ethereum, but not really. Like it's all like, it's not just wrapped in like this nice, easy present that you can get from Microsoft. Whereas Ethereum, you got to dig deep to identify like, What are their future plans? How many businesses are currently constructed on the Ethereum blockchain, and how much revenue is that generating? And like, you go through all that stuff, and it's like, it's really not as easy as it seems. You think from a decentralized standpoint of like, okay, this is Ethereum, I can see everything on the blockchain, but yes, you can see everything, but you, at the same time, you can't see anything.
Yeah.
In my opinion, like, it's like this kind of like pseudo fake, it makes you think that you can see everything and you have visibility to everything, but really, to be able to have the visibility to all that, you have to dig it super deep. Whereas on a Microsoft, if you want to have visibility to a generalized understanding of their business and what's in the future and what they're currently building and what they're doing, it's really not that hard to figure that out. But if you want to figure that out for Ethereum, it's pretty hard to figure out. Like, you can't just see it in 5 minutes and understand fully what their plans are and where they're going next, and then be like, you know what, I'm going to invest money in this.
Yeah, I mean, I'm not going to disagree that you can find stuff for, publicly traded companies a lot easier. But I would argue that, with the help of third-party services like DeFi Llama or whatever, like Etherscan, like, you can get access to certain things a little bit easier, I guess, more access to things, like, especially if sometimes celebrities' wallets get, leaked, and it's like, oh, okay, well, I could trade based off of that celebrity. Like, it gives a little bit more freedom for small time. I mean, for kind of the you and I's. Like, imagine if we became good traders and people found out our wallets and they started following our trades like that. That could be kind of cool. Or, I do know that the average trader, though, is not looking at that.
Yeah. I mean, if you take like a DeFi Llama or an Etherscan or something like that, there's still a decent amount of digging that you have to do to be able to uncover anything. Whereas, like I said, at least with Microsoft or, Intel or, Netflix, Google, any of these companies, like, you're at least able to see a general understanding of what their product lineup is, what they're doing, what their future plans are and stuff like that. Like, Google is big on the AI side of things right now, and they're working on progressing with that. They just released a folding phone. That's a big deal for them. They're pushing that pretty heavily. They have an Android, massive ecosystem with Android. You can see and understand that. Microsoft's doing the same thing on the AI side of things. They have, Microsoft operating system. So you can see that stuff that's like tangible. Whereas Ethereum, it's just like, the fuck is happening?
Yeah, I mean, I'm going to be honest. I don't really look at the Ethereum Foundation and look to see what they're doing. I mean,
but you're heavily invested in Ethereum. Yeah. And you're confident in it long term. So it's like,
don't call me out right now. What are you doing?
It's like, what are you confident in at the end of the day, right?
Well, I believe overall in the crypto ecosystem, and I think that Ethereum plays a huge part into that. And so I think, a lot of things can be built off of Ethereum, and a lot of things are built off of Ethereum that will provide additional value. We've had this conversation in other podcasts. I mean, do I think it's going to, 10x? No, not at all. Like, I'm hoping for just slow and steady gains and a safe place to park some money in crypto, which is hard to find. I always really appreciated those, Twitter accounts that would dig deep into like the rugs or through the wallets and whatnot. And as you could follow it through Etherscan, you could see like, oh, this is how this project just stole everybody's money. And, I know that holding ETH, right? I'm at least as far as I know, it's not going to get stolen. And there's no project currently out there right now where I'm like, I feel confident about this long term that I want to invest in, other than just tokens like, Matic or, BNB, things like that. I mean, outside of that, there's no other crypto project that I feel so confident about. So
same.
But I do feel confident in crypto. I think that's why I think like, ETH is going to be around for a long while, if not forever. And I think it's always going to have value. And I think that we have seen what a bullish market can produce with very little adoption. Imagine when adoption spreads worldwide, like what that is going to do for crypto in general. And, you know, kind of thinking about that, you think about the stigmas that are attached to that. How do you see our adoption rates for crypto increasing?
Well, I mean, I think right now, the looming like cloud over all of this is the regulation side of things, and trying to identify what is going to happen in the regulation side of things really somewhat dictates, at least in the U.S., what the plan is going forward. I mean, I think the U.S. is extremely clamped down on the crypto side of things. In my opinion, what they're trying to do is really push their own legislation and trying to do whatever they can to trying to identify like what is the best way that we can monetize crypto in the US. Once they have that all fleshed out and figured out, I think the regulation side of things, I think they're going to open it up and allow US to trade crypto on a regular basis. I wouldn't even be surprised if we see it on like an E-Trade or a Charles Schwab and stuff like that, where you can consistently buy different crypto assets. But I think the SEC is going to want to regulate that to where they're finding a way to profit off of those executions of trades and things like that to allow people to trade that. So I think we're still a little ways off. I don't anticipate to see that in the next year or two. So I think we're a little ways off on that. But, I think long-term crypto is here to stay. I think Ethereum and Bitcoin are going to consistently, generate profit and go up in value over time, as well as some of the altcoins that are out there. I think that'll be kind of like a cyclical rotation over time. But I think the biggest challenge that we have, or unknown that we have right now, is like, when is the regulation going to come? What's it going to look like? And how are people going to be able to interact with crypto once that time comes?
Yeah, I know we've talked about that as well, like with exchanges and, getting on board with crypto. I know it was recently announced that there was multiple exchanges that were going to create a crypto exchange, or multiple funds rather. And I know there was some news out recently with Cathie Wood and her Bitcoin crypto ETF, and it's definitely coming. It's definitely going to happen. There's no doubt about it. I think that the U.S. will catch up to the rest of the world, and I think that is going to bring value to those core staples, but it's also going to open the doors up for so many more things to happen. And I think, I think talked about this in the either episode 1 or I think it was episode 1, but it was just about the gamification. It's going to open the door and allow for companies like Blizzard to come in and create a game that is really worth playing, or a Ubisoft, or maybe, anybody, just to play, to have a game that's worth playing that involves a crypto community through tokenization, through like utility. And it's almost like they are like every investor is like a developer in the ecosystem because they're contributing to that. And I think as we see stuff like that, I think in hindsight, we'll look back and be like, it was so obvious. But I think thinking of it right now, it's like there's a lot of unknowns that has to happen before we get to that level. And it's hard to, I think the biggest stigma that crypto has is when you talk to people about it, they think of it as monopoly money. No, very few, they think of it as like NFTs that they just heard on the news, like, oh, NFTs, this, that, or whatever. And it's like, those are pictures at the end of the day.
Yeah.
Like
art.
You're focusing on a part of crypto that is big, but also has nothing to do with so many other versions of crypto. And, we're more into the trading, and I think we're into the tech as well, like the future of what is going to come of DeFi. I know I'm big in DeFi, and I know when we go to these conferences and we go to these, speaking events and we talk to people, like I'm interested in things that happen in DeFi that push decentralized finance. And I am excited that I learn something new every single time, but yeah, I still feel like the adoption of it is super far out because I can talk to my friends about crypto and immediately I can see in their face, they're like, no, I'm not interested.
Scam.
Yeah. it's a scam. I don't want to hear it. I would rather trust my money with, JP Morgan, which like, okay, yeah, I mean, how's that going for you for now? I mean, we're stuck with them. But if you had an option to choose, maybe you wouldn't choose them. But I mean, at the same time, I get it. It comes down to education, and the education around crypto has been pretty shitty.
Yeah. I mean, I agree. I think there's a level of understanding of crypto that you kind of need to have or understand or find a way to, get into different groups that are able to explain it to you to really be able to dive in full force and be comfortable and confident in what you're, investing in and things like that. And right now it's just kind of like, it's very fragmented. In the stock market, even in the stock market, especially when we go back to what we were talking about with technical analysis, it's like, the information on technical analysis, if you want to understand candlesticks, you can learn about that. If you want to understand indicators, you can learn about that. But there's not really like it's kind of all over the place. Like you can find information here, you can find information there, find it all over the place. But there's not really a easy centralized location that really just like puts it all together for you. I mean, you can go to Investopedia and you can learn about this, that, and the other thing, but there's so many technical analysis. The challenge with it is that it's just like, dude, the information is limitless. So it's like, it's impossible to digest all of it. The different time frames, the different indicators, the different candlestick types, the different candlestick patterns, all that data, the different assets that you can trade on, all that stuff, the volume, volatility, trend, source, support and resistance, momentum, all that stuff, and try and encompass it all to just kind of have this perfect layout. And that's really, really challenging. So I think, that's obviously a big deterrent from the technical analysis side. And then you move into crypto. And I think that's just another step that is just like, the understanding and the feeling around it is challenging. Kind of along the lines of what I said about the fundamental side. It's like, if you compare Microsoft to Ethereum, it's like, the average Joe, that's Joe Schmo on the street, if you were to, put a mic in front of them and be like, tell me about Microsoft, and then you put a mic in front of them and you said, tell me about Ethereum, they're going to be able to talk way more about Microsoft than they're going to be able to talk about Ethereum. And that's the problem. Yeah. And there's the knowledge gap there in the introduction into crypto. And then obviously on the US side of things, it's like, shit is locked down like a mofo. So it's like, the average US person can't even really get into it, even if they wanted to get into it, because there's not very many options to do so. But one thing that you touched on that, like, really, I've been very confused about for the past several days / weeks is this whole ETF thing. Like this, talking about how BlackRock and some of these other big players have gotten into the ETF market of crypto has sent the market soaring over the past couple of days / weeks. And I'm just like, dude, I've been in like Wealthfront, I've been invested in a crypto ETF that is Bitcoin and Ethereum for like 2 years. So it's like, this has been around. It's not like it's like it's not like it's like this new idea that is like this big thing. And I'm just sitting here like, yes, some of the bigger players have adopted it, but it's like, this isn't really new. Like, this has been around for several years now. I've traded a Bitcoin Ethereum ETF with a couple of, altcoins mixed in with that for like 2.5 years now. And I'm like, I'm trying to understand, like, I understand that the bigger players are coming in, but I'm like, this is not new. This is nothing new that's happened. This isn't really, honestly, in my opinion, it really isn't even that big of a deal. Like, I'm not quite understanding why the community and crypto in general has like taken such a shine to it. I'm like, it's really us kind of small potatoes at the end of the day.
It could be small potatoes or it could be large potatoes. BlackRock manages a shitload of 401k funds. And then when you're investing in a 401k and you have a very large population investing in a 401k, that money has to be spent. And that money is spent pretty much every week if you think about it, because every week paychecks are going in and investments are happening into these 401k funds. And so they get an opportunity to influx shitloads of money pretty, consistently, I guess. as people buy into the ETFs. Like if you're investing in one of these ETFs in a Roth, or maybe your 401k allows for that, which probably be a little bit new right now, but
Probably not, yeah.
If it were to, you're starting to put money in constantly, and so BlackRock is constantly buying to support those, needs. And I think that could do wonders. That's sort of like a pseudo adoption, because it allows people to safely invest because they probably don't know the risk of crypto and how volatile it is, to buy into these ETFs. And Kathy Wood, she came out with all of her funds. Her ARK funds they got
murdered over the past 2 years.
Yeah. I was a victim of a few. And I think her companies, though, the companies that she chose made perfect sense. What really screwed her over is she saw this huge popularity around 2016, 2018, during that period, and COVID set everything back. I mean, especially her funds that talk about AI, it's like, okay, most of the advances that need to take place, these are future forecasting products for companies, and they had to put a lot of that shit on the back burner because they ran into supply chain issues and they had to focus on different areas of their business. And as those companies focus on those different areas, they had to let go of some of these, future ideas. And we saw that her funds really were good at picking long-term investments. I hope that this stuff comes back. But yeah, she's creating an ETF. I mean, it seems like everybody's going to have one, and it is weird.
What do you think is the average, if you're the average person, just the average Joe, what is the age that you would be comfortable putting a large chunk of your, retirement into a crypto ETF? I'm thinking 40, 45. Because I'm even at 65, if that's your retirement age, I'm thinking, it's high risk.
45?
Yeah, 40 to 45 is your highest age you would want to go to.
Highest, yeah.
Yeah, to put, a good, let's say you want to put 60+% of your, you want to be in a high risk situation. You want to put 60+% of your 401k or your funds or whatever into crypto. I think it's got to be, we had this conversation on the last episode of what is the highest age you feel comfortable putting your money into a higher risk, or higher yield, higher risk, higher yield, 401k. And I was saying it was 55-ish on the high risk side in the stock market. I think you got to shave 10 years off of that on the crypto side.
If I was consulting with somebody and they were telling me that they wanted to put 60% of their money into crypto, a very high volatility.
Think about right now, though. Crypto has shed 50+%. You don't think that's
give a flying fuck? I would be like, are you fucking stupid? 60%? This is your future you're thinking about here. And this is the problem with crypto. And this is the problem with the average crypto trader.
Hold on.
What do you hold on to me for?
I'm 34 right now. I would, if I actually may have the ability to do this right now at the moment.
Yeah, but do you?
If I had the, I had the ability to,
you got the ability. Buy into Coinbase.
If I had the ability to, in my 401k account right now, to move 60% of my funds into crypto as an ETF, I'd do it. 34 years old. You wouldn't do it? You wouldn't feel comfortable with that?
Well, my answer was going to be 40, 45. That is, to me, you
got 20 years.
I don't like it.
At retirement, if you're thinking a 65-year-old retirement, you got 20 years.
60%.
Yeah, 60%, 50% plus at minimum.
But that's like saying, okay,
dude, if Bitcoin and Ethereum even just retrace back to their high levels of a couple of years ago, you've 100% returned your 401k.
Can I ask you something? What is why would these double in value, triple in value? What is going to triple Bitcoin in value?
Regulation and adoption, like we were just talking about.
Get the fuck out of here. There is no utility to Bitcoin. I mean, like, listen, man, you already
said that you think Ethereum's going to go to 5K at least.
I never said that. In fact, I said quite the opposite. I said I expect it to go slow and steady. It's a good investment. I'm not expecting it to.
So you don't think that 3X. If you bought a Bitcoin Ethereum ETF combo at the moment, where you're buying Bitcoin at 30-ish K and Ethereum at sub 2K, that's not a good investment opportunity?
No, I do think that's a good investment opportunity.
What's the problem?
I don't want to put 60% of my
50%.
A fucking 50%. I don't want to put 50% either.
20%.
Yes, 20% for sure. For sure.
No.
That's high risk because
you have to have conviction in your investments.
Listen, there's other high risk opportunities that I would want to get into. Also, you got to think, man, like if starting in 2016, well, maybe that's a terrible example because in general crypto was low, I suppose, but
you would have made bank.
Yes.
Boom.
Whatever. Okay. It's timing. Timing is everything. If I started in 2016 in the stock market compared to now, I'd be making bank. If I started in 2018, I'd be making bank. In 2019, bank. 2022, bank. If I started crypto in 2021, 2022.
Yes, but if you had started in 2016, 2018, 2019, like you're just examples, you would have made way more bank than you would have stock market. So,
but I also think that I'm not holding on that long. I would never
This is your 401k. You can't do anything about it.
I would have sold that shit. I would never 10,000% gains. No way. I would never see that.
10,000% gains.
I mean, if you
2017 maybe on Ethereum, obviously.
Yeah,
that was sub $100. So, but not Bitcoin. I mean, that's up like I'm probably 350% or something like that. Because it was like 7K at that point.
Yeah, no. I mean, look, I do think that there is a place for all of these assets in your future.
What would be the max allocation you would be comfortable with in your 401k for a Bitcoin Ethereum ETF?
A third. Because always I'm going to have a third as ultra safe. I'm going to have a third as like medium risk companies. I'm like a third of that is going to be me thinking very long term. Like I want to know sectors. I want to invest into chips. Like I've got money going into Intel. I've got money going into, NVIDIA and all of these chip companies, AMD, Taiwan Semiconductors. These companies, I believe, have a place in the future. Tesla, I still believe, has a massive place in the future. They got a setback, but man, I think there's so much potential with Tesla beyond the car. Well, what I think that we have seen from Tesla in general is people are just investing in the ability of that. They're going to, revolutionize automated driving. But I'm like, man, that's just one product. I think that they know that they were never a car company. They are going to be a company and they're going to have other products.
They're a tech company.
Yeah, they're a tech company.
Yeah.
And they're going to have other products.
They're not a car company. They're not a car man. They're not like GM.
And they own Solar City and they're very closely tied with, X, which or SpaceX, Boring Company, all of these things that Elon Musk are tied to could easily fit into a Tesla umbrella. And I know that this guy has just guardian angels following around him. People love him and they buy into his stuff. And I think I recognize that. So I think things like that is a high risk asset for me. It is very volatile. I would put that in a high risk category, but I would put, if I now am dedicating a third of my, 401k to crypto, now suddenly Tesla is in that medium category.
I'd be willing to bump a little bit higher than 33% because I'm thinking, for myself, I'm like, you're in the same boat as me, but I'm like, if we're thinking retirement of 65 and where we're at right now, we got 30 years. You don't think you could be at a 50 to 60% clip on, crypto, and 30 years from now, you're going to be cashing out big fucking money?
I hope so. Yes.
Same. But even at the same time, even if it, obviously, first off, probably not going to zero. Second off, even if it does somehow, 20, 30 years from now, you haven't really made much money. It's like the other 50% is going to compound so much over 30 years that it's going to be kind of somewhat inconsequential at the end of the day. So, in my opinion, the risk is highly worth the reward of being able to put a large chunk of your long-term savings that's 30 years from now into crypto, especially if you believe it's going to be a player in the long term.
I mean, but look at what you're saying. Like, let's just take a look at Bitcoin, for example. I mean, it's 30K right now. When it was at $1, you could say that, like, this thing went up 10,000%, far more than that, actually. But when you look at $30,000, if this were to do 300%, like, look what Bitcoin would have to accomplish at that point. It would have to be essentially $100,000, roughly. I mean, obviously it would be before that, but there is plenty of opportunities within the stock market that are going to achieve far more than 300% gains over a long period of time. You can look at FANG, Facebook, Apple, Alphabet, whatever, Netflix. I was like,
Google.
Google or Alphabet. Why did I say Alphabet?
Same company, kind of.
Yeah,
more or less.
Basically, yes. But I mean, like, looking at all of them, Microsoft's not even included in that, but they 10x'd in the past.
Yeah, but
10 years.
What is their potential lifeline or expectancy going forward? You could say the same thing about in the last 10 years, Bitcoin is like 5 million x'd in the last 10 years. It's just like you're saying with FANG, but then it's like, okay, well now it's at 30K, kind of like your same argument. It's like, okay, just like Netflix and all these other companies have had such a big come up over the last 10 years, Bitcoin has had such a big come up over the last 10 years. So you're like,
that's what I'm saying.
What's the potential of, Bitcoin 300%ing from here? And it's like, I feel like the same argument can be said about Netflix or Google or Apple or any of these other companies. What's the chances of them 300%ing over the next 10 years or 20 years? That's
what I'm saying. These companies become safe investments because they operate like when you buy into a Microsoft.
So what's the difference between the FANG and Bitcoin?
Because Bitcoin is not a safe investment. It has the same potential of an increase as some of our S&P, top 10, 20 companies, like their market. Like if you look at an NVIDIA, I would say that they have a far greater chance over the next 20 years to far outperform Bitcoin.
I don't think so.
Because what is Bitcoin going to do? Like NVIDIA can easily 10x. And I know I'm saying that because they're like $1 trillion company or whatever, but it's like, this is where the stock market gets a little bit hairy, right? But like if we truly go into robotics, there are companies like, maybe NVIDIA is a poor example. Let's think of AMD or Intel, far less, market cap size. These companies are going to have the potential to 10x, whereas Bitcoin 10xing, dude, we're looking at $300,000 Bitcoin. Like, do you think that's really going to happen?
I mean, I don't think Intel or AMD is going to 10x. There's no way.
This is where we need a Jamie, man. We need a fucking Ryan sitting over there, but like, what is the market cap of Intel?
I mean, I don't know what it is now. I mean, I know before it was trading at like, somewhere between like 40 and $70. And I'm like, you think that thing's going to be $700 a share? No chance.
Shit, dude, some of my first...
I don't believe it.
Listen, man.
I know freaking Tesla and Amazon and Apple, they all split a bunch of times and, the price went crazy and all that stuff. I don't see it.
Man, my first Tesla shares are before any splits. My shares are $280 a share. That's when I got my bulk of my Tesla funds. Went up to $420 and I was like, man, I'm going to sell. And then he started pulling shenanigans and it split like 2 or 3 times since. Like my 280 it literally has 10x. And it's like, that is a company that has so much more potential.
You're having the same argument, though, is the fact that these companies have already 10x or done this or that, and you're thinking they're going to 10 or 20x again. But then when it comes to Bitcoin, that thing's, 10x over the last, however much time in the past year or two. But then you don't think that one's going to have the same situation.
I'm taking a fundamentalist point of view here when I look at the company. When I look at the companies of Tesla and the companies of these chip, like AMD, Intel,
but how many of those have, 10, 20 years ago were other companies that are no longer exist? Same with on the crypto side. There's always,
there's going to be some that fail.
There's 5 to 10 companies that are within the top 20 market cap that end up, 3, 5, 10, 7, 10 years later, they don't even exist anymore.
But that's what I'm saying about Bitcoin is essentially the Apple of crypto right now. And when people say like, oh, Apple is going to, 10x from here, it's like, no, it's not. That's going to require it to be worth $20 trillion.
No chance.
So how can Bitcoin's the same thing? When people are like, oh, this is going to 10x, I'm like, that is going to make Bitcoin's market cap an insane amount of money.
The difference is that is capped in terms of the amount of Bitcoin you can. I mean, it's first like somewhat deflationary.
They did say it was going to be like 150 fucking years or some shit before
it's like fully mined.
Yeah,
yeah.
But this is where I've always had a problem with Bitcoin is it becomes there's no value except the value that people have put into it. Whereas like the value that a company like Apple or Microsoft or Nvidia, Intel, whatever has, it's real value and there's real growth potential because they're going to create products that will eventually sell to consumers. Nvidia is getting into, like, if they get into the robotic side of things and their chips are in fucking gajillion robots, whether that's like vacuum cleaners, lawnmowers, or full-on iRobot style things, like that is going to provide them with shitloads of revenue and it's going to make them future-proof. Whereas Bitcoin doesn't really have that.
Yeah, I mean, this kind of goes back to what I was talking about before of like, if you went up to someone on the street and you asked them, about investments and you pitch Microsoft to somebody and then you pitch in Ethereum to the same person, like, they're going to be able to talk way more about what Microsoft has going for it than they're going to be able to talk about what Ethereum has going for it. So,
absolutely,
that's, kind of the same thought process of what you're saying is like, you can speak to what these companies are going to do in the future more so than you can on the crypto side.
And that's why I think like companies like Ethereum or foundations like Ethereum rather they're good long-term investments, but I don't think that they're going to, I think like having that as a huge part of my 401k, for example, is not a great idea because I think it's too high risk for the potential reward that I'm going to get back. I think that those opportunities for insane gains is in the past. I think there will be altcoins, there will be new Pepes, there will be new things that pop up that will 1000x, a millionx, whatever. But I'm saying like the Ethereums and the Bitcoins, I don't see them ever do. I mean, obviously, Ethereum is not going to 1000x at this point. If it did, I would cream my pants and do a dance in front of the entire fucking world because I'm a gajillionaire at that point. But I know it's not going to happen. And I know that for me, I wouldn't want my 401k in all these shit coins that have the true potential.
But at the same time, I don't think the stock market is going to do any of that either. You're not going to get 1000x out of the stock market in the next 10,
the difference
20, 30
is the
years.
401ks. Think about it. Every week, money is going into the market. That money has to be spent. It's not being spent anywhere else except index funds. And what do index funds do?
So are the Bitcoin, Ethereum ETFs. Same shit.
But that's what I'm saying, man. It goes back. Like, how much are people going to invest into those Bitcoin ETFs? I mean, yes, I think we're kind of saying the same thing, but we're also slightly disagreeing. But how do we increase the adoption of that? That was the initial question.
Right.
I would love for more and more money to go into Bitcoin and Ethereum ETFs, but I think that the stigma right now for crypto is people don't want to put their money into that. And even me, who is in crypto, I'm capping myself at 30%.
Yeah,
it's too risky.
It's understandable. I mean, I still think I'm in the same boat. Like, I think a lot of people aren't, all in on crypto. And I've said it multiple times, even in all like our Discord and stuff like that. I'm like, I don't really know the exact percentage, but I'd probably say if I had to give you a number right now, I'd probably say I'm about 75 to 80% of my like net financial worth is in the stock market. And probably about 25%, maybe even less than that, is in crypto. And that's just because like, there's still a lot of risk that comes with crypto. There's still a lot of, unknown that comes with crypto. And so I'm not willing to go, and take my entire portfolio and put it 100% into crypto, because that's a massive risk for myself that could set me back several years or even a decade in terms of my finances that I've built. So, I think most people are probably even worse or different than I am. I might be at 80%, stock market crypto, even though I'm primarily focused on crypto and primarily in crypto on a day-to-day basis. My finances don't necessarily reflect that. Whereas, even the average Joe is probably more like, 95 to 98% non-crypto and maybe like a couple of percentage points in crypto, just for the minor exposure into it. So, it's definitely, I think we're still a couple of years out from even seeing anything more advanced than that. But, that's where I'm at personally.
I mean, I would argue that the people that are in crypto that voice their opinion the loudest have the biggest stake inside of it, and that they talk about their investments the most. And I mean, most of that, the dollar figure is probably very small. But like, just think of crypto Twitter and all these people defending all of these projects, tokens, whatever. It's because they have a stake in it and they're hoping for that moon, aspect of it. I think Watcher Guru, he's a very big Twitter account.
I've seen that one, yeah.
Yeah, he talks about Dino a lot. I think it's him.
I don't even know what that is.
Maybe it's a whale.
Oh, I mean, there's a lot of those whale accounts. Yeah.
Whale Watcher or whatever. I don't know. One of these big ass Twitter accounts, they talk about this token Dino all the time. And I'm thinking like, this is so easy for us to see, but it's hard for the individual that is trading. But like, they're an influencer. They're trying to get people to buy into their token and so that they can probably make money from it. But it's just like one of those things. It's like, it's hard to get someone who comes from a stock mindset to be able to, like you said, look at these companies, look at the products they're making, look at their revenues, and invest in something called Dino, which I'm in crypto. I fucking have no idea what Dino is. How is John Smith from, fucking Austin, Texas going to be like, oh, I know everything about Dino. And the people who know everything about Dino means that they're invested in that project heavily.
Yep.
So there's a lot of pitfalls with crypto. And I mean, we could talk about this all the damn time, but I do think that in order to increase adoption, there's going to be some challenges. And I know that the government is constantly pushing their digital dollar like movement, which I think is going to happen. My biggest question is like, okay, well, the digital dollar happens. What happens to like USDC, USDT? Where do these go?
Yeah, I mean, I think they've built up enough of a volume and a base that I don't think they're going to go away. But I do think that volume and that user base is going to diminish a little bit. But I mean, it's really hard to really understand exactly what that's going to look like at the moment, because I mean, in my opinion, first needs to happen regulation, and then the U.S., if they release their own digital, dollar or whatever they release, then we have to see how that impacts, a USDC or USDT and what that, ultimately looks like. I would assume that the digital dollar is going to obviously take precedent and, be the primary currency that people use. But I think there's still going to be some viability to a USDC or USDT. But, a lot of that comes with understanding what the regulation looks like, understanding what a digital dollar ends up looking like and how transactions work, all the details that come along with that. So in my opinion, I still think, although I think that's on the horizon and that's kind of what's going to happen in the future, I still think we're a little ways away from that. So I'm not really like super pressed or worried about what's going to happen to USDT or USDC, because I still think we're a little ways away from anything, crazy happening. But I still think both of those are going to be, potentially viable in the future.
I have a theory that, as things become like, as the US government becomes more, inclusive to crypto and they do have a digital dollar, I think people are going to realize how free cash actually is and how decentralized cash actually was. Because if you think about,
or how fake it is,
possibly both, but like think about the, like how anonymous spending cash is. Like once the government gets on chain and everybody has digital dollars, you will bet your ass that you're going to get taxed for every penny spent. It's going to be on chain. It's going to be easily identifiable. It's probably going to provide this easy way for you to do taxes. And it's going to be very easy for the government to see, like, you're sending this person money, you're buying money here, you're doing this. There's going to be no way to hide money. And cash, you could hide a lot of money. You could money launder. I mean, that's where businesses were made. And the initial entry of crypto was like, I can buy things anonymously, I can spend money, and the government can't track me, which kind of is going to flip roles here if the US government gets on with digital dollars.
Guaranteed.
And now it's going to be cash. It's going to be like the free currency. It's going to be weird.
It's going to be a script flip, basically.
Yeah. I don't know if anybody ever saw this or if like everybody sees it.
Yeah, I mean, it's going to be interesting. I mean, even think of just like, your old school like Facebook Marketplace or Craigslist transactions that you make.
Oh, yeah.
That shit is going to be taxed. Whereas before you might just be, exchanging, $50 cash for something that you're selling to somebody, and you're like, you might either A, forget about that happened, or B, you're like, I'm not putting this on my tax return. It's just like a transaction. Whereas, if everything's digital, guaranteed that shit is getting tracked and tacked on, and you're paying, some percentage of a tax on that sale. So, I think a lot of people don't really necessarily think about that. I don't necessarily think a digital dollar is going to be great for everybody because I think it's going to be more money for the government, less money for everybody else, more control for the government. I don't necessarily know if we'll get to a point of like a China situation where it's like, based off your spending habits and based off what you do here or there and how your money is tracked, you'll be allowed or disallowed to do certain things. In my opinion, I would not even be surprised if that happened in the US. I mean, I know it's somewhat extreme, but, I wouldn't even be surprised if it's like, if you don't have a credit score of this or you haven't paid off this or that, you're blocked from doing this. And I wouldn't be surprised if we got to a world where things are dictated based off your financial stature or
it already is that.
Don't know. I mean, my thought is a little bit more extreme. I mean, I've seen people that got denied like a subway ride in China because they hadn't paid a bill or something like that. And I'm like, in my opinion, I don't necessarily think that's far-fetched for the US to do the same thing.
Yeah, I definitely think it is. Like, imagine first off, going back to what you were saying about like, getting taxed on these Venmo or PayPal marketplace, whatever. Imagine like buying a video game for $50 or whatever. You're getting taxed on that sale. You play for a little bit. And you're like, hey, you know what? I don't like this. I'm going to sell it. And now you're getting taxed a second time for selling it.
Yep.
And it's like, okay, on that one transaction, maybe it's only a few bucks, but then you compound that over every single transaction. Holy shit.
It's not good.
It's not good. And I think this is another way for the very low class and the upper class to be separated even further. And I know there's this whole movement right now that talks about how the middle class is kind of disappearing, but I mean, it really is because people think one thing, but then another agenda happens. And I'm kind of worried that this is sort of what is about to happen with the regulation side of things. Is I think we've said it, I think there is a lot of upside for US to enable the regulations because then all of a sudden we can trade. And that is going to increase adoption. It's going to bring more people in. But again, it's like, what is the alternative. It's like the monkey's paw. Like, something happens is like there's a cause and effect. Like, what is the effect of that? The effect might be that, hey, overall, we're going to be paying more on taxes.
Yep.
Fuck.
Yeah, I mean, that's just the way it goes. I think that's what's ultimately going to happen. I wouldn't be surprised. At the end of the day, I think the regulation is going to be good for crypto. But once the digital dollar situation ends up playing out, I think that's going to be bad for the average American.
Yeah.
For sure.
I wonder how much money the government is going to save on not creating cash too.
Yeah.
They're
basically creating a new currency, which like resets inflation and everything. Like it basically resets it all to zero, and then they get to start fresh.
Yeah, I mean the whole like situation that China was talking about with the digital yen is like if you, for example, if like you don't pay your bills on time, you can't go and buy like entertainment items. You can't go to the movie theaters if you're behind on your mortgage, and it's like,
I know people think it's radical in a way. I mean,
it's
first off,
good and bad.
First off, that is very radical on the China side of things, but I don't foresee the U.S. not doing that. I could definitely see the U.S. doing that 100%. I think a lot of people see that in China and they're like, that's just China being crazy. But I'm like, watch. I think U.S. is going to be like a hold my beer situation. Watch us do this shit.
I mean, on one hand, it's like, okay, this is why we should be teaching finance early on, is because you shouldn't go to the movie theaters when you owe money to pay your rent, right? Like, you need to take care of your essentials. And if you're not meeting your essentials, you need to get another job, or you need to get a promotion, or you need to make a lifestyle change here. And it's like it's so hard for a lot of people to swallow that pill. But I mean, at the same time, it is this freedom issue is like, if you want to have the freedom to make terrible financial decisions, maybe you should be allowed to have that freedom.
Yeah.
I mean, that's kind of how the society is going to work. We need poor people for there to be rich people.
Yeah.
And
I mean, it kind of goes back to our beginning conversation about technical analysis. In my opinion, it's like you have to make the mistakes in my opinion, there's not anybody that I've met or seen that has learned technical analysis and just been permanently profitable. It just doesn't happen. You lose money at the beginning because you don't fully understand exactly what you're doing, and you take the mistakes that you made and you learn, okay, I shouldn't do that shit in the future because I'm going to lose money if I do that. And then you're able to build upon that, and you get, build and build and build, and then you become profitable. And that's how you do it. So, even just taking this example about, just general finances, like, if you're going to make you have to be allowed and afforded the ability to make mistakes so that you can learn from them and in the future be smarter and be better, or else you're just going to consistently make the same mistakes and be poor forever.
Yeah, and that's what the digital yen situation, it sets people up to remain poor, and it keeps them in this system of like, oh, you screwed up, you're going to,
get punished.
Yeah, get punished for it. And it's like when a parent like hits a kid and says, you don't hit people, and then they hit them, and it's like,
contradicted yourself.
Yeah, like what kind of message are you sending? Like,
yeah.
And again, it's like on one hand for China to do that, I think you could argue a positive side to this and saying like, well, they're making their society more educated about this. They're trying to protect people. But we all know that this is definitely a controlling, situation.
Yeah.
So
100%.
That's the only thing that I get worried about with, America coming into crypto. But, that subject could be a whole other podcast of its own. And I think we've gone a good bit here, and, it's a lot to reflect on and
covered a lot of topics.
Yeah, I'm excited for what's to come, and I know we have a lot of updates with Bread Bites that we'll be sharing in the near future. But
for sure,
if you'd like to, you can follow the Crumbs on our socials at Baking Profits, at Bread Bites, at The Bread Maker, at DeFi Donut, and we will check you next time.
Looking forward to the next one. See you later.
Take care, folks.
Peace.